Disclaimer, I may not short Tesla. It depends if I can see a good entry point. We know shorting Tesla has never turned out well for traders in history. However, I still see a good timing window and hence explaining my options trading thesis for the month of November. Hey guys, welcome back. Today let's talk about how I may set up for a potential short for Tesla. So how do I plan to short Tesla? I plan to short Tesla through buying put option. Viewers on my channel know that I'm usually selling put and buying call options. I have never bought put options. I seldom short the market because the market is up 80% of the time and down only 20% of the time. However, today, curiosity is going to kill the cat. I see a good opportunity shorting my favorite stock. So as a trader, I cannot be biased of the long-term growth and forego short-term fluctuations. So today, let me be the guinea pig and try to attempt to short Tesla. And if I fail my short on Tesla, we all learn something from this. Let's understand why I see an opportunity to short Tesla. We first take a look at TLT, the 20 years Treasury bond. The bond market can reflect an investor's sentiment. When general sentiment is fearful, everybody is scared to invest, money will go to the bond market as a flight to safety. The bond market has an inverse relationship versus the general market. We look at where the pandemic started, from February 2020 to March 2020. There was a huge demand and surge in price because it is a flight to safety. Subsequently, when the market recovers, it becomes greedy and everything becomes overvalued. Then in April to May of 2021, we experienced correction, and now currently in November 2021, we are back to all-time highs again. To make it simple for you guys to understand, we can tell where the market sentiment is using TLT. The higher the TLT price is, the higher the demand. It represents fear in the market. And vice versa, the lower the price, the lower the demand. This means that investors are confident and greedy with the economy. We can tell from the current TLT that we are approaching a quite confident and greedy market. So I'm a contrarian. If people are extremely greedy, I'll be on the opposite end and be fearful. Moreover, Elon Musk has a 10 billion tax bill that you have to pay by selling his Tesla shares. I'll link Dave Lee's video down below. When he does sell his Tesla shares, there will be a downward pressure to the price. He will have to do it, but maybe not in this month. So my strategy for November is that I will not be selling a single Tesla share, but I will be doing a hedge put. Let's first explain what is a buy put option. Buy put option is the right to sell 100 shares with a small down payment called premium. My maximum losses are the premium stated. I can close the contract at any time within this time period. I'm thinking Tesla has almost exhausted its bull run at $1,220 and I may be buying put option to protect any paper gains if Tesla has a correction. The higher Tesla goes, the higher odds I will be doing a hedging put. I will still be holding Tesla stocks. I am long the Tesla equity, but I will buy put options. So say for example, if Tesla sits at $1,220, I execute a buy put trade. So this is the current delta, negative 0.453. Say in this case, Tesla falls to $1,160, that is a $60 drop. $60 times 0.453 times 100 shares. That equals to $2,718 profit excluding time decay. So do you think $2,718 is worth the risk of shorting Tesla? Let me know in the comment section below. Personally, I'm thinking that it might not be worth the risk. But if Tesla goes to $1,300, it will be more appealing to buy a put option. Let's theorycraft on how I should buy a put option. Usually when I'm selling a put option, I'm extracting time decay. This is why I sell put option on 30 days window because time decay extremely fast in the last 30 days. Now I'm on the other end. My goal is to minimize time decay of the premium I have paid. I will buy put option longer than a month period. I also do not want to bet against Tesla long-term fundamentals, so I'm not going to buy a 1-year long-term put option. So I think the sweet spot will be a 2 to 3 month buy put option. Not too short-term and not too long-term. Next, I don't want to pay too high a premium buying put option. As I've mentioned before, the higher the volatility, the more premium I pay. It is indicated as implied volatility. The lower this percentage is, the lower premium I pay to own the rights to sell 100 shares. I'll be waiting for Tesla chart to tell me when this rocket ship is stopping and hitting a limit. So when it ranges and the volatility drops, I think it will be a good timing window for me to execute a buy put trade. So this is my trade plan. I wait for a low volume on Tesla all-time high. I wait for low implied volatility so that I pay lesser premium. I'll buy a put option in 2 to 3 months window with the best delta. If I do execute this trade plan and if I do profit, I will use the profit to buy more Tesla shares. So why I may do it is because I want to try different strategies. Selling a put option now is not appealing because Tesla may come crashing down. The premiums are not attractive and our risks are much higher selling a put option at this pricing. I also feel that this is a great way for everybody to learn. If I fail, there will be great lessons to be learned and takeaways. If I do execute the trade, I'll post on Twitter, and when I close the trade, I'll post on my Twitter as well. It is most likely going to be a fast trade. I will not hold the buy put option for long. If you learned something from this video, don't forget to like and subscribe. This will be a great way to support my channel. I'll see you next week.